just go and drop a trade, and I'll talk you through it. You can do it with $5, and it'll be good training if you want to.
I mean,
I would just pick a different asset because that one doesn't exist anymore.
yeah, let's see.
Like Bitcoin or ADA. I mean, you could jump into that one.
I was just gonna say that ADA was. What is this?
Yeah, and this will be really, I think this will be a really good training for people too, because we went over quite a few practical application items too. But yeah, with my big picture like goal for you is just that you should not be breaking even or having much trouble. Usually the people that have the most trouble would be just not doing anything, not learning, not executing. And I see you're obviously executing. So I think the only other thing that's just dangerous or can be dangerous is doing, high leverage with, especially with no data.
Yeah, I gotta revisit that. I think that's my problem is I just jumping in at like 10x all the time and not.
Yeah, yeah. I mean, you're probably better off to do low leverage and higher capital, even if you're doing like a $2,000 position, but you're doing it at like 2x leverage, is probably safer and you have much less of a chance of liquidation. So remember, if you want, you can draw that chart, draw that Fibonacci retracement. That might actually show you where those levels are. Yeah, that one up there. You might have to expand the chart a little so you can see it all. Yeah. And double click on that top one so you can get rid of that volume bar. That'll help. You just drew it upside down is all.
Oh.
Yeah, because remember, it's going to retrace down into the red or the yellow or the green. And the greens, the greenish looking colors are the favorites for looking for something. So you can delete that. I would delete that one and then just expand the chart where you can see the most recent low.
The drop from.
Yeah, I would get rid of that and then just collapse the chart a little bit so you can see the most recent low and you can draw it from the right place, because the most recent low was actually around 230 on 230 today, and you can't see 230 today on that chart, so, or 230 central time anyway. Yeah, so you see that low, that's where you would actually draw it from.
Oh, this one.
Yeah, is that it? I can't see it, but it looks,
yeah,
it's about 33 cents basically. So you might just like get it to where you can see all of that, and then I think it was before that. Can you scroll over where you can see more of that chart? Like drag it to the right a little bit. There you go. So you see that like very, very low point, lower than that.
This one.
Yeah, yeah, the very bottom of that wick. That's where you want to like specifically drop that start of that tool and then drag it up to the very, very top. Yeah. And again, this is for like, this specific like intraday trade. So yeah, right. Perfect. And so you can drag it over to where you can see it, and like it covers the whole past 10 hours. Just drag that bottom dot. Yeah, that works. That works just fine too. Mostly you just want to make sure it's drawn properly. Yeah, so pull that up just a little bit where it's literally touching it perfectly. Yep, right there. And then right there. And then, yeah, and then if you wanted to be like playing the game while you're watching it, then I mean you could market order in when it gets to the 0.5 or when it gets to the 0.618.
Right.
You could even try when it gets to that yellow, you know, the 0.382. But those two greens will generally come into play in most cases. And usually that's where you see some buy pressure show up. So if you were going to market order in, it's such a better experience market ordering into that area than FOMOing into, you know, where price action's at and then having to suffer through, you know, a huge drawdown or continually getting stopped out, things like that. So now you take that
Right.
long and short tool and you can kind of draw some, you can draw a couple different entries and decide what you want to do. And that's where you can have the staggered entries and the exchange will treat them both separately. You know, I would do one at 0.5 and then one at 0.16 and then check your one that I know has not ever had like really tight asymmetry. So that I think will change your whole life if you have much tighter asymmetry and you calculate it ahead of time. And I would not hesitate to make those kind of skinny and then just drag them over to the chart itself and line them up right on those lines. And your entries would be right above those lines and you'd have like give or take 8 or 10, you know, risk reward ratios. And when you're dealing with that level of precision, you'll have a much higher likelihood of entering the trade and being successful on one of them. If you get lucky, it's just the first one and you don't even have to worry about the others. But remember, we looked at where the line was, and the line was actually at about the first line, the first take profit was at about 37, give or take, 37 cents. And then the second take profit line is, you know, closer to 38 and a half. So at a minimum, you know, yeah, I would be looking at like that for my take profit.
Got it.
And I always try to like, even if you drew both of them just to the 37 cents, that's a good way to make sure that you have at least the bare minimum of asymmetry. So the first one looks good. That's in the most conservative situation, you have a 9 or 10 risk reward ratio. You're willing to lose 0.76%. So you could probably 5x that and it would be like 4%. And then the second one, if you look at that one, if it goes there, then it may not go all the way to 38. It may not go to 38 cents. So I would bring that line down a little bit to where the first one is. Now and then if you do that, it's going to be this or better. It's going to be 17% risk reward or better. If it goes higher, it's just going to get better. So you could do something like this. And if you wanted to, you could, with that kind of, I mean, you could easily get stopped out with that tight of a stop loss.
I was gonna say that 0.4 around, like what percentage are you looking at on that?
It depends. If you're planning to do it for like higher leverage, I would probably do something like if that's what I'm going to lose, then I'm going to be comfortable with 5x.
Got it. Okay.
You know, I look at what I'm really going to lose, and then I go, okay, now if I multiply that by 5, how do I feel about that? And so for me, like, okay, that's about 5%. The other one is 0.78, so you could even multiply it by 8x, and you still would only lose like 5% of your money. But the cool thing is now you're basing your entries off of some sort of logic that a lot of the rest of the world is also using, and so you have at least a much higher probability of you know, being able to enter the trade. Now this is still kind of, in my opinion, precision, based. So if you want to win more, then you widen your stops and you lower your leverage. You know, so if you're like, man, I'm still losing, I get stopped out too much. It's because you're still going after precision moves. And so all you have to do is just say, okay, you know what? I still want to use good leverage, but how about like 4? And that way I can have like a 1% stop, which is pretty darn wide. And if I lose 4. And that is
Yeah.
just frankly a lot. It's also a lot less stressful than watching, than having to sit and watch and stuff. And the moment that you go into profit, still use that same tactic of protecting your trade the moment you have the opportunity. So that way, from the get go, you never risk more than about 4 or 5% on anything. And as long as you get a chance to make an adjustment somewhere in the middle of it, whether it's an hour later or hour and a half later or whatever, it's nice to be able to go ahead and move your stop loss up a little bit.
Right.
And then you're in that situation where you make a little bit, or you make quite a bit, or you make a lot, just depending on how much you're playing with.
So when I do, let's just go with, for this one, for example. I probably want to take that down to like 1. Yeah. About the same on both. So I set this one conditional trigger price. When I think I'm having a hard time, like when I set these, isn't that number shouldn't be set over there?
I usually just use on those, I would usually just use the limit orders. Yeah, so limit order, and then you just look to the right over there. So your first one is the gray, right? The 3442. And then your second one is the 3411. So you could do 3442. Yeah. And then you could do like a couple $100.
Yeah.
Or whatever you want. I mean, you could do 100, just practice and have 100 in there. But honestly, now I feel, a little better with your leverage. But being that you have a pretty wide stop loss, I would still say 4x is probably all I would want to lose. I mean, which would be 4%, maybe 4 or 5%. And then on the other one, if you just depending on how tight your stop loss is, if you have, more like a 12 risk reward ratio, then that would be where I would say, you know what, let's go for the 8x, And I think
so
if you got
that's showing right there, that roughly 4%. So
yep.
Not bad.
And it's an estimation. It's always a little more on slippage, but at least it gives you an idea. If it's grossly wrong, then at least you know not to click the confirm button and you go, oh wait, I must have messed up and done something wrong. Yeah, so your first trade 3442, and then your stop loss, it looks like, is 3409. So yep, that looks like it's done properly. And so your take profit 3697. Yep. And so now you look at those numbers too, and you say, okay, this is not worth it to me though. I don't want to play this game. I don't want to play this game for $15. And so like you just you make the adjustment to like what makes sense. And it's kind of a funny thing to have to think about because we don't know what numbers to choose. But the right answer, I think, is pick a number that it makes sense for me to be spending my time playing the game, or at least this is the goal, right? For practice is one thing, but when you really get to doing it, pick a number that it makes sense for me to spend my time playing this game. And then also on the protective side of that, pick a number that the money velocity doesn't move so fast that it makes you feel like you're having a heart attack.
Right.
And that's it. And so for some people, it's bigger than others. I think everybody should just start off with something just reasonable. Like these are great numbers to like train with. And then as you get better and more comfortable and all the things are making a lot of sense, and you're, especially if you're journaling, which is one thing we're really pushing. If you're journaling and, you know, evolving and taking notes on the things you did that were dumb or things you did that were smart, then I think it's great. But these are great numbers. You know, if you could stand to lose what'll end up being like 20, 30 bucks, and you like the idea of making about 150 bucks, maybe 150, maybe even a little more if you have two different take profits with like partial take profits, then that, I think that's a great place to practice, and you would only grow into playing a bigger game.
So let's say I did that limit.
Yeah, because this price is coming back down to where it's, unless Bitcoin, you know, falls and has problems, there's a really good chance that you get a really nice entry on one of these, and the way you have them stacked, possibly both. What's kind of interesting is you could actually successfully enter both trades. You could, it may not be probable, but it's definitely possible from what I can see.
Right, so then I hit that.
It would have to wick to the very, very bottom of the first one stop loss zone, and then pick up the one to the right, and then it would be, you know, it would just be kind of cool if you were in both trades and doing well with both of them. But
Now essentially it looks
uh-huh.
like, oh, I think that's why. No, it looks like, so I switched that up, but then it almost looks like it's the same. Take profit 167 compared to with $20 loss. When I
3378. Yeah, you use the lower stop loss, so it should be 3409. The stop loss on this one should be 3409.
Oh, that's why I went with the lower one. That's the
Yeah.
one thing that got it. So it's a lot less.
Yeah, that might even be too little.
Yeah.
But is that right? That seems like it's really low. Did you change the entry too?
I changed the entry to,
It should be 3442 and then 3409. I think you changed both. You probably just put it in and didn't place the order. So yeah, 3442 and then 3409. And then that, yeah, there you go. That's 3.8%. Okay, that looks about right. And so then I would long that with the limit order, 3442. Yep, so that's right.
oh, there it is.
So,
Yep, it didn't go through. That's why.
yeah, and so now you set the other one and you set it with the other data. So that one would be 3411 and 3378. And now you double check the numbers and you double check your take profit. Another thing I like to do right here is just look at that number. So like whether it's the percentages or the absolute value, and then look at the one below it and just do the division. And so like 31 divided by 4 is basically your risk reward ratio, right? 31 if I win, divided by 4 if I lose, that's about 7.75 risk reward ratio. Yep, that's good. And so in some cases, you could even like order properly, you know, without actually pulling out your calculator. You could just at least make, if you ever just wanted to at least make sure your asymmetry is done properly, you could just do division on that. And so, yeah, on those, if you now you can go to current orders and you can just kind of see like what you have going. And we'll probably check back later and see how it did. Yeah, they'd be under active. Those are, you may have some things going on in conditional too, but those are not those.
Old ones that these are old ones that I set back when I was thinking, like I was like, if I just did this crazy one off Bitcoin, like if it bounced down to 48.
Yeah.
Jump up. Like it was just one of those. I was like, I'm gonna trigger it like with the crazy
Yeah,
order
so I
price
don't
in
know,
case,
I don't,
in case they did it.
I don't know what kind of like leverage those are. I know nothing about those, but the active ones I think are cool because those are based on everything we just did,
Yeah.
and I think you did them, textbook, and you literally, in your worst case nightmare, you lose like $45 if you lost both of
No,
them.
I like that. That really helps looking at those. I think that's been my problem is that's just that little trigger of looking and seeing like moving those things around, understanding these. That helped
Yeah,
out.
I think so. When we talk about fibs and now when we draw them, hopefully this helps. If you go to, but keep in mind, like fibs are very, like, I'll show you my screen real quick because I think this is important too. Let's see. If I show you, I'm going to go to Uni here. Share, what is this, desktop one? Yeah.
What are you using? What platform are you using to trade stocks on? Like
Uh,
E-Trade or
Thinker,
something?
I use Charles Schwab Thinkorswim, and I really love it. Because it's just a whole different kind of game in that you don't have to worry about liquidation, and you can. I've seen like one of them I had on AT&T was like a 780% return, and it was like in 12 days or something. It was just AT&T was at like $19.70, and I said I think that within 32 days it'll be at least $20.50, and I was right, and it went beyond that. And just the way that the money, I think it's a little more complicated to explain how they give you the reward if you win, and there's different little nuances. But overall, it's pretty awesome that I had like that much time for my trade to go upside down, and all kinds of things.